I'm bearish on the SPY, and I just entered into SPY 600 puts for October. In today's video, I'm going to explain the thought process of what I think is going to end up happening over the next few weeks in the market. We're going to look at the large tech stocks, the SP 500, the NASDAQ, the Russell 2000, the VIX, crypto, all that good stuff. So if you guys are enjoying this video, please make sure to like, comment, subscribe, do all that good stuff. Comment down below if there's anything that I could help with further. But I think this video is going to do a very good summarization of what I think is going on in the market. All right, so without further ado, let's get started. All right, so first and foremost, this is a chart of the S&P 500 ES futures on a daily chart. And as you can see, we're still holding below this very, very important trend line. I entered into 600 puts for October. Okay, so October, they expire at the end of October. So this is essentially the end of October. And this right here is where 600 is in according to the SPY. All right. So in the short term, right, to be very, very fair, in the short term, the market can continue to rise. But this, in my opinion, is not the time where you want to start leaning long at all. If you do want to lean long, it would need to be for a much longer horizon. The odds of us falling lower, in my opinion, increase over time, especially heading after July. So in the short term, maybe within the next week or two, the market can continue rallying into new highs. But after that, the odds and the likelihood of us falling increase dramatically. So the reason why I first entered into some October calls is because eventually the market can rise another 1 to 2% very easily. Right? A 2% increase brings us to 64.50 on the ES, which is very, very possible within the next 2 weeks. My point is that the odds of us falling down to 60.50. So even if we were to rise to 6,500 even on the S&P, getting a even 3% drop, a 4.5% drop, even a 4% drop will make the trade profitable. So even if you were to get it now, essentially, right, the market can rally up to 6,500, and if it drops 3%, 4%, this trade is going to be in profit regardless. So essentially, there are a lot of really solid trade setups in the large tech stocks. We're getting a lot of strength. We're getting a lot of buyers coming in. But one of the main issues and the main things that we're going to be taking a look at. So there's two main things. All right, so number one, this trend line. So this trend line on the S&P 500, as you can see, we're hugging it to the downside. And the reason why this trend line is relevant is because we've been monitoring it for quite some time. Since October of 2023, this has been, the S&P 500 has been in an uptrend with multiple touches back here in August of 2024. And then most recently in March, this is where we ended up getting a pullback and a breakdown of this trend line. So as this trend line ended up breaking down to the downside, it was acting as an uptrend for a very long time. Once it finally broke down, the next day afterward, we ended up getting a bounce to that level. Once this failed, we capitulated very, very hard. And this signaled the start of the drop into April. All right. So now to recap, we ended up going long on April 7th at the lows here. So we are still holding on to some of our longs. Okay. So we're holding on to some of our long position because we caught the bottom. And now, right, what I'm doing is I took some profit on my long position and I'm entering into longer term puts as a hedge for the long position because I do not think the likelihood of us rising up in the next week or two, it's possible, right? But regardless, now is not the time when you want to start positioning yourself for October calls. So there's two main decisions that we can make right now. October, right? By the end of October, where do you think the market is going to be? Do you think the market is going to be at 6,700? Or do you think the market, in the short term, do you think it's going to just end up by October, hit 6,700, never get any sort of pullback, and just be in the sky since April? So April, May, June, July. It's already been 4 months of upside. Is August and September 6 months of straight upside? Is that the likelihood? Probably not. That's not going to end up happening. So it could, right? By all means. That's why we're still holding on to our long position. But we have to hedge because the likelihood of that happening is very, very slim. That's not how you make money. Regardless of whether you think something is going to happen, you make the best possible decision to make money in that moment. Nothing else matters. Your opinion doesn't matter. What public sentiment is doesn't matter either. So in the short term, in my opinion, the first scenario is cool. We can end up rising for 6 months. Most likely that's not going to happen. The more likely scenario is we could rise to 6,500. Sure, we could rise to 6,500. Let me clean up the chart. We could rise to 6,450 to 6,500. Great. But from here, in my opinion, the market should be getting a substantial pullback. Because this is not a sustainable move. I could be wrong. But we need to get into some sort of blow-off top scenario where bulls become extremely euphoric and people start trying to chase very aggressively. We haven't really gotten to that, which is a big significant factor of whether or not we're going to fall. We haven't gotten to that. I think the setup for that to occur is a rally up to 6,400, maybe 65. But, once we hit those levels, the likelihood, and once we hit those levels in the way and the veracity that price rallies and touches those levels, that's what's going to determine how big of a pullback we're going to have. So what I mean by that is if the market just starts to completely rally in the next week to 6,500, that starts to signal some sort of a blow off top. Aggressive buying is not going to sustain itself. So getting a bit of a pullback becomes that much more easy and attractive. So in October, so that's why I'm essentially getting into October puts. Okay, does that make sense? That's the whole point of me getting into October puts, because over the course of the next month or two, even if the market does well and is bullish, the odds of us dropping increases very, very dramatically. For us to hold these levels of support without getting a substantial pullback is very, very unlikely. If it does, this would be this would be genuinely a very, very big anomaly in terms of price action. So it could happen. This could definitely happen. Maybe we're just early to entering into hedges, but each contract was only 1,100, and this is essentially a very safe play to take. We were long since 48, 49, 5,000 on the ES. We're at 6,300 now. We were long into the extreme weakness, so essentially right now what we're doing is trying to mitigate any downside. So that's why we're entering into some puts. And that's my game plan essentially for the next coming weeks. Also after July's OPEX, when the options expire, during the third week of July, that could be another really big inclination of a switch in the trend. So we could get a pullback heading into the end of July, early August. So end of July, early August is when I'm expecting there should be some sort of a pullback. So you guys could, if you're going to remember something, just remember this part. Heading into the end of July, early August is when a pullback should start. And that's when the market weakness should start to permeate, if it hasn't already, by that time. So October puts, solid trade. I'm very, very confident that we're eventually even going to be 20-30% gain on October puts. So this is a very, very solid trade. And you guys can remember this. And if it's correct, I expect everyone to be like, wow, good job. I expect everyone that for the past how long have we been calling everything perfectly? How long is that? How genuinely, how long? Remember back in April. Oh my God, you're crazy. You're going long into the weakness. Oh, you're gonna lose your money. Oh, you're gonna blow up your account. Oh, how'd that go? Did it go well for you guys? We went long in the absolute bottom when every single person on Twitter, this is the start of a bear market. Oh, jobs. Oh my God, so many people are getting laid off. Oh my goodness, what are we gonna do? How'd that work? How'd that work out for everyone? So, this is another one of those situations, guys. I haven't been wrong. So just please, if you're gonna do something, you're watching my video. If you're a hater, just put your ego to the side. Just if this is gonna be the first time that I'm wrong, it is what it is. Maybe it's just bad luck, but this is what it is. Okay. So currently, all right, that's my game plan. We could see that the ES is trading below the trend line, and it needs to reclaim it. I'm assuming it's going to reclaim it within the next week or two, and then heading into end of July, early August, should get a substantial pullback. Now, what's even more interesting are the tech stocks and the NASDAQ. All right, so what I want to do is I want to go over all of the large tech stocks one by one and give you guys a good overview of what I think is going to end up happening. And we're going to look at a lot of these large tech stocks have solid bullish setups. So that's another sign that we can start to really rally. And we're also going to take a look at Trump's tweet, which is also positive of tech stocks and crypto. All right, so number one, Trump posted on Truth Social this morning at 10:30. He says tech stocks, industrial stocks, and the NASDAQ hit all-time record highs. Crypto through the roof. NVIDIA is up 47% since Trump tariffs. USA is taking in hundreds of billions of dollars in tariffs. Country is now back. A great credit. And then he says, Fed should rapidly lower rate to reflect the strength. USA should be on top of the list, no inflation. So obviously just this tweet caused NVIDIA, caused AMD to do very, very well. Chip stocks were the leaders in the market today. We also saw Bitcoin, Ethereum, and Solana all pumping because of this tweet and essentially all of the positive setups that we're seeing in these large tech stocks. So now AMD, right, was creating a bear flag. If it broke lower, then AMD would have touched 130. So now we can see that AMD jumped up 4% due to overnight strength. And also this tweet, it continued doing well, right? So 146 is a very, very important level now on AMD. And for us to break out of a bear flag. So what you guys need to know, right, when you're looking at bear flags at an all-time high like this is the odds. So let me just show you guys this. So number one, when you're creating a bear flag and you break above the all-time high, that in and of itself is very, 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 very rare. All right. What ends up happening is if we do end up making new highs and rallying, right, the market tends to fail at around the 1.5 fib extension. So as you can see, the 1.618 fib extension is at 156.50. What should happen generally, according to charts, according to technical analysis of the past and everything, is when a bear flag ends up breaking like this, we get a rally to around 153, 154. That should end up being the top. And AMD should generally top out over here and essentially give a good shorting opportunity. Now, how much of a percentage increase would that be? 6.5%. So if there's going to be a 6.5% increase in the in AMD, 7%, right? That should bring the overall market higher as well. So for the ES to go to 6,500, that's about a 2.5% increase. All of this is sort of lining up for that blow off top scenario that I'm sort of expecting. And I do think the July OPEX is going to have it's going to be a big factor for this. So that's essentially what I'm looking at and what I'm looking towards. AMD does look very strong for us to break above the 786% fib. So you can see that we're holding the 786% fib. For us to even close above the 618% fib, it creates a 70% chance that we're going to end up breaking the highs. Once you break above the 786% fib, it becomes an 80% chance that you're going to break above the highs. So the odds of us making new highs is very, very high, just according to the break of this bear flag. So now what we need to do is see how much more room there is. So that's essentially what the situation is for AMD. And if AMD is going to rise like this, NVIDIA is also definitely going to rise. We have this fib extension level here at 166. You could definitely see 168, 170 area on NVIDIA as well. That will overall bring the large tech stocks and chip-related stocks to highs and continue to make new highs. And that should be very, very interesting for Google and Microsoft as well. So what we can see right now out of Google is holding this downtrend level very, very well. So this is a downtrend level from back in January of 2025. You could see multiple times it's acted as a level of resistance. And most recently, it's also acted as a level of support. So as you can see, it's acted as a level of resistance, and now it's currently holding as a level of support. So I still don't think this would be a very, very good opportunity to go long. I would much rather see Google hit 171 to 172 before trying to go long. Because going long right now and breaking above 183 would be very, very aggressive. And it's, technically still holding well. If we're holding 176, by all means, Google can continue rallying to 183, 185. And then just overall in the next few months, 185, 190 is very, very possible in Google. But just in the short term, what we're seeing right now, this bull flag that we're seeing here is just not something that I generally would go long on. I would rather wait for a retest of the lows of this bull flag. So the lows of the bull flag would bring us down to around 173. That's essentially what I'm thinking. So that's why I wouldn't try to be bullish on Google right now. Microsoft created a bit of a topping formation. We're still holding above this uptrend level. So Microsoft, just like these other large tech stocks, are in complete uptrends. This is an uptrend from May of 2025. Multiple touches. Everything has been acting as support this entire time. We had a bit of a wick down below back in June. That was not an issue. We made new highs right after that same day. And since then, the market has been holding this as an uptrend. So if this holds 500, right, pragmatically, if it just continues holding 500, this strong psychological level for bulls, this is going to continue rising. Microsoft looks very, very bullish. But the issue is that if it does not, it's just very far overextended now, right? So if it doesn't continue showing this much strength, a sharp pullback is very, very possible. So essentially, if you want to remain bullish on Microsoft, you want to see 498, 500 area hold. And you could just continue trying to go long at these levels of support at any instance of weakness. You could do that. You could play Microsoft like that. Because at the end of the day, you don't want to get caught trying to short one of the winners, right? You would rather go short. You don't want to go short one of the winners into strength, because that strength can continue. You would rather go short one of the winners when it starts to show weakness, or you would rather go short the losers when they show strength. So if these other large tech stocks start to show extreme overextension, but they're not Microsoft or NVIDIA, right? You could go short into that extreme weakness when they hit a major level of resistance. But you don't necessarily want to do that for Microsoft or these large winners, because that's just not safe, right? All right, so what I want to look at is a chart of Netflix. All right, so Netflix is a perfect indication of why you want to wait to go short into one of the winners. All right, so we were looking at how Microsoft, we were looking at winners in general, right? You don't want to go short into extreme strength. So as you can see, Netflix, we were holding, this uptrend since April. Great, solid uptrend. It's acted as support multiple times. And then most recently is when we finally broke down to the downside. Now, what I am arguing is you would much rather wait to try to go short into weakness on a winner instead of trying to go short into resistance. Because the strength can continue happening. You can continue rallying into new highs. But that's just because you're rallying into new highs and you think, oh, wow, there's no way the strength is going to continue. It doesn't matter what we think. The market can continue doing what it wants to do. So it can just continue rallying. It can just continue making new highs. But you don't want to preemptively try to short aggressively while it's doing that. What you would rather do is you would rather wait for weakness and a confirmed weak situation. So what we saw was Netflix breaking this uptrend, finally, showing weakness. We saw that it tried to retest the 50% fib at 1300. That failed. We saw that it tried to reclaim the uptrend level. That failed. This was very, very bearish. And this showed a lot of weakness. This started to give the inclination of a continued bearish move. And had you gone short along this trend line with the 50% fib as a major level of resistance, this was a good indication that the move to the downside would occur. So that's why I would not even want to try to touch shorts on Microsoft until something similar happens that we see on Netflix. Okay? Hope that makes sense. Amazon looks really fantastic. Amazon is actually one of the best setups that we see so far. We could get a retest of 220, but Amazon looks very, very solid in terms of the setup that we're seeing right now. We're holding above 220, which shows a lot of strength. It does look bullish. We should see 226, 227 on Amazon. Google also. So I'm sorry if I'm going over some of these. I ended up making like I don't even know, but like a 45-minute long video. Half of it wasn't even recording. So I'm not sure if I'm going over some of them again, but essentially Google, this was a downtrend level that we created back in February, and it's acted as a level of resistance, right? So now most recently it's now acting as a level of support. So 176, 177 is holding as support on Google here. We can rally and rise. And it looks, as long as it holds 174, the move to the upside can continue. And 185 is definitely on the table for Google. Meta, it does not look great. So Meta is another one. It's in a bear flag. It doesn't look great. We have clear-cut resistance at 736. This is not a time where I would rather go short. This is not a time I would try to go long on Meta. This is a bearish situation. It looks more bearish than it does bullish. So I hope that makes sense. But we're still clearly in an uptrend as well here on Meta. So it's tough to just be bearish. You would rather wait for a break of the trend, right? So that's that for Meta. We took a look at all of the large tech stocks. Tesla is still holding 300. It's showing bullishness, but also Tesla is within a range. 320 to the upside, 300-ish to the downside, 290. But going long here, you're basically trading within the range. So what you would rather do is, if you want to go long, once again, you would rather wait for a bit closer to support, or you would rather wait for a break of the resistance to go long. I wouldn't want to take a long trade while in the middle of this range here. And to really, really put this all together, we need to take a look at the VIX. All right, so the VIX So this is going to really wrap things up, and it's going to put everything together, hopefully. So the VIX, we have room to the downside on the VIX. And why the VIX is important is because it has an inverse relationship to the market. If the VIX, which we can clearly see, the VIX is bearish. So if the VIX is bearish, right, and the VIX can drop down to 15 or 1450 right now, bearish. If the VIX drops to those major levels of support, what is going to end up happening? The market is going to rally, because the VIX, when the VIX drops, the market rallies. Okay? So now when the VIX hits this level of support, what happens at support? Things bounce at support, right? So once the VIX hits this level of support, it's going to bounce. When the VIX bounces, the market as a whole should be getting a pullback. So this, looking at the chart of the VIX, coinciding with how much more room there is to the upside on these large tech stocks and on the SP 500, essentially all coincide. Like if the VIX basically drops aggressively another $2, that's going to send the S&P 500 up. Once the VIX hits a major level of support, after essentially causing the market to rally, right? Once the VIX is at support and it starts to bounce, that's when the S&P should be hitting a pause and start to fall. That is essentially what I think could end up happening soon. But in the short term, I took into account that we might not even rally. We might not even rally. And even if we do, by the end of October, the S&P should be falling regardless. So that's a pretty safe trade in my opinion. I'm not a financial advisor. This isn't financial advice, but all of those things combined give a pretty decent honestly, it gives a pretty decent outlook of what's going to end up happening in the coming months, especially in the coming weeks, right? So that's my thought process. I hope that makes sense. We took a look at the S&P, the VIX, the large tech stocks. We did not take a look at the Russell. So the Russell is the last thing. I mean, I did another video. I'm not sure if I did in this, but let's just do it again anyway. So the Russell clearly has a lot of strength. All right. So if the Russell rises to this major level of resistance, right? So the Russell has room to 2350. If it rises, this is only 2.5% gain. The Russell can definitely rise because, as you can see, the upper level of the Bollinger Band on the Russell is vertical. When it's vertical like this, it means that there's a lot more room to the upside. If the bands were tightening, right? Just think about what we've seen before in the past. If the bands tighten and they start to point lower, it means that we are starting to get overextended. When things get overextended, that's when the likelihood of a pullback increases. But when the bands are not overextended, when the bands are not tightening, instead they're expanding like this, that means a huge move in the Russell can continue. And that's essentially what's going on right now. And because the Russell looks like this, because the VIX looks weak, because a lot of these large tech stocks look good also, all of these things as a whole show that there's still more bullishness in the short term. But for October, for September, October, these are really good setups for a pullback, in my opinion. And we could see some more upside for the next 2 weeks. Short, but things are starting to look a bit interesting to the downside soon. So I hope this makes sense. I hope you guys enjoyed the video. Please make sure to like, comment, subscribe, do all that good stuff. And I'll see you guys tomorrow. Thank you. Take care.